Welcome to the Elevated Trader Podcast. I am Dr. Kristen Kidgel.
And I am Tracy Ball. Join us every week as we journey into becoming better traders.
We believe becoming better traders involves elevating our skill, our mindset, and our health. In each episode, we will discuss the current book we are exploring, and we invite you to join us on this journey.
Are you ready to elevate your trading, mindset, and health to the next level? Let's do this.
Tracy, we got a new book. It's monstrous. It's the 3rd edition, Candlestick Charting Explained by Gregory Morris. What do you think so far?
Part 1, yeah. It's going to be exciting. It is as thick as it's a Bible. It's massive. But you know what? The point of it isn't to read. This is not a book that you read from back or front to back. This is a book
like I'm doing.
Yeah, maybe. This is a book that you're going to be adding to your resources as a trader. That's pretty much it. And with anything, I mean, one of the standout quotes or one of the standout sentences in the first introduction, the author says, one should always look into any new technique with a healthy amount of skepticism. And I believe this wholeheartedly in anything that we hear, learn, or do, that we should be applying skepticism. Skepticism isn't a negative thing, I don't think. I think it's a blessing. I think it's an ability for us to have discernment and use our brains to really think about what we're hearing and doing and apply some level of confirmation or detective work on our own part to make sure that it makes sense and that we understand it. So that's the case with this as well. I mean, this is a book that is full of candlesticks, candlestick patterns, candlestick information, candlestick lines, individual candlesticks that mean something. So it's jam-packed full of information. I think it's going to be good. I'm going to love it. How about you?
Oh, love. It's such a strong word, isn't it? I will get something from it. I am getting something from it. I enjoyed the history. I enjoyed right out of the gate where it said, candlestick analysis is a form of technical analysis. Just as like right out of the gate. And what constitute it being a part of technical analysis, right? So it's needed to keep us from falling victims to our emotions and delusion. Okay. Minimal use. It says minimally useful for uncovering and organizing facts about market behavior. Okay. It could give you insight that's fast to analyze the trading psychology at that moment. Okay. And let's see here. What does it say? Read the changes in the makeup of investors' interpretations of value. So it's read the changes in the makeup of investors' interpretations of value. Okay, so hold on. I don't really understand what I wrote. Interpretations of value. That makes sense, right? So when you're seeing a candlestick or a group like Morningstar reversal or something like that, you're understanding what the market makers or the people and the investors are, what value they're putting into that price point. Is that what you would get out of that?
Yep, absolutely.
It's Japanese, right? The Japanese started this?
Japanese candlesticks, yep. They started it basically for the rice trade. So figuring out the rice trade. And it then was a great way of presenting the information, and we adopted it on this end because it's very similar to the bars. But I think it's easier to read because bars give the same.
Way easier, yeah.
The bars give the same information. You can see where they open, the close, the high, the low. You can see the range, but it's not as visually appealing. I think the candlestick is far more appealing. It's much easier to read, I think.
My first trading course seminar I attended was bar charts. Honestly. That tells you it tells me, in retrospect, not the psychology, so to speak, but maybe the training that the person training me had.
Oh, it's old.
It's old.
Experienced, so. Yep. I mean, there's a lot of people that can trade very well with the bars, so I totally get it. And like I said, all the information there, I think it's just a lot more visually appealing seeing it as a candlestick. Yep.
So the book has a lot of chart examples, but it also has these pattern detail information boxes where they did their own analysis and breakdown, and it explains things like, do you need confirmation? Yes or no. What else does it have in there? It has like the percentage of wins versus the percentage of losses, or net wins and losses. And then it has it's only over 7 days, and it's only over stocks. So this is what it says it just basically, the pattern detail information boxes consist of pattern statistics are from 7,275 stocks over 14.6 million days of data.
There you go.
So yeah, it is stocks, and it's literally, though, it's just like they see the pattern or the candle or whatever with the weird names, but we'll go through some of those. And it's just for the next 7 days how it reacts. So if that's a reversal candle or reversal pattern, how strong is it for 7 days? But again, we have to keep note that it's talking about the daily candle. But you may argument that it's fractal. Are you going to do that to me?
I am. I'm going to argue that it's fractal. It doesn't matter. I think the bigger point to take away from this is that the statistics are based on every time that pattern has shown up, and it doesn't take into consideration other factors like liquidity, like volume, like support resistance levels. I've taught this many, many times. I've shown this in in order flow demonstrations where I talk about liquidity and how the market moves and what movement you get from each price activity that takes place. And when you have liquidity, low liquidity, and liquidity is basically the amount of participants willing to interact in that environment. So if you don't have a lot of people willing to transact, that's low liquidity. It's very different than volume. Volume is the amount of transactions. You can have very few participants, but they want to trade a lot. That's a lot of volume, but low liquidity, where you have a lot of people that either trade a lot or a little, but you still have a lot of opportunities to make transactions because there's a lot of people that want to do it. So very different from volume.
Well, everybody's rewinding to hear that a couple times.
Okay. Well, there you go. So
they're going to replay that. I'm going to replay that when I listen to it again.
That's good. I mean, because
feel free to rewind 30 seconds unless you would like to repeat that all over again. No, I'm just kidding. Go ahead.
So it is different, volume and liquidity. So I have shown people in order flow videos how liquidity can really impact the outcome of a candle. And one example is you can have two transactions that happen in say a 5-minute time frame, and only two transactions, one at the open, one at the close. That's it. And they can be at very different prices. And if there's too much technical aspects that I have to explain here for you to actually visualize it, but the reality is whatever the price transacts at open, that's where your open is, and whatever transaction price takes place when it closes, that's the close price. And that could change the shape of a candle very quickly. And you could end up with this great big giant bull candle. It looks bullish because it's a big white candle and it's spread over a great distance, but only two transactions in it. Not a lot of sentiment behind that candle. Where if you have a lot of participants, a lot of activity, a lot of liquidity that's taking place inside of that candle, that increases the mentality. So if I was to simplify this into a different term, it would be like trying to stop basically a moving car and reverse it back. That takes a lot of effort. You're not going to be able to do that with just an individual person. So the more force that you have to push against, the more force that it takes to reverse a lot of pressure coming at you and then take it into the other direction. That takes a lot of sentiment, a lot of conviction behind it. I hope that makes sense to everybody. But my point is that there are many factors that can be added to candlesticks in themselves that's going to help better these statistics. So the statistics don't take into consideration any of that. Okay.
So when you're creating your chart, usually they have us put volume across the bottom.
Mhm.
But if volume and liquidity are so different, how can we read liquidity?
That's a great question. Well, first of all, order flow, your level 2, that type of thing is going to definitely show you liquidity. But the biggest or the quickest way that you could probably do it is go down to the smallest time frame you have available and look at what candlesticks. And if you have a lot of gaps happening between the candlesticks or just little ticks, that's really low liquidity. Your higher liquidity stocks are going to look just as fluid on the 5-minute as they are on a 1-minute as they are on a 30-minute. You're not going to have these big massive gaps between them, between each candle. So that's really the quickest way of looking at it. But otherwise, if you look at your order flow, that'll be the key. The other thing is the speed at how fast the price is moving. That's another indication. So if you have a lot of speed happening, the transactions are happening really quickly, there's usually a lot more liquidity.
Okay.
And then there's another thing called a spread. If you can see what the spreads are, if your spreads are really, really wide, and what a spread is basically your lowest available seller, what price they want to sell at, and your highest available buyer, and the difference between those prices, that's a spread. And the bigger the spread is, usually the lower the liquidity.
Yep. So what about the tick chart?
So a tick chart is, and I like a tick chart, and again, this will really show out, liquidity is going to show up with speed in a tick chart. So the difference between a tick chart and just a normal candlestick chart is a candlestick chart is forming a candle over a specific duration of time, where a tick chart is actually going to form a candle after a certain number of transactions take place. So if you look at if you look at a 300 tick chart, say in the morning at the very open, it might go really, 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 really quickly. And then after the first 15, 20, 30 minutes, it might start to slow down. And then by noon, it's at a crawl. It could take a long time for that candle to form. You're just sitting there. Is my computer frozen? Am I still watching this? Because it's not moving. It's just taking a long time for it to move. And then all of a sudden at the end of the day, it picks up again and it starts running like crazy. You won't see that with a normal candlestick chart. It'll move at the same pace throughout the day because it's based on time. Now, I like a tick chart, love a tick chart. I don't have access to them on TradingView because they don't provide tick charts on TradingView, unfortunately. So TradingView, if you're listening to this, please add it because it's a valuable asset. I think tick charts show you more information quicker than a time-based chart. And you can look at a time-based chart and then something that would be equivalent to it in a tick chart, and you're going to see a lot more information at that point. That's what I like about the tick chart. Do you use them?
You can get one for free and use TD Ameritrade's Thinkorswim trading platform. You can get the tick chart there.
If you don't live in Canada.
And not in Canada?
No.
You can't even open it. Okay. You can't even log in with like my stuff?
I'm not sure. I might be able to.
Yeah, well, they're not web-based. You'd have to download the platform. But NinjaTrader also does the tick chart.
There you go.
So, and I'm sure there are other people. I'm absolutely sure. Does Tasty Works? Does Interactive Brokers? I'd be shocked. So that brings me to another question. And by the way, I would like to side note before this next question is the questions that I'm asking her and the stuff that she's answering is not in this book. This book is solely... Right? Because this is important, though.
Yeah,
you made an important note. This book is not taking into account blah, 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 blah. But you're making me think of other things, right? So if there's like, oh my gosh, well, who though? What they're like, maybe I'm answering questions that they're having too. So we can finish with this one. What about the footprint chart?
The footprint. So that's going to...
Yeah, a lot of people don't know about that one.
So again, I don't have access to this anymore because I used to when I worked with, or when I used Sierra charts, but the footprint chart again is going to show you liquidity, and it's going to show you some support resistance levels. I find that I can get that same information just using the volume profile, which is why I use the volume profile.
There you go.
And that's my friend. I love my volume profile, and I will take that any day of the week. But the footprint chart, it just shows you an imbalance. So it shows you your buys, your sells, your market orders that are transacting there, and then you can start to use that to see whether or not you've got support resistance levels that are happening at a specific price, and whether you're getting an imbalance of buy orders versus an imbalance of sell orders, et cetera, et cetera. So These are all benefits that you can utilize in conjunction with candles. And that's the point. So when you're looking at this book and you're seeing the statistics, remember that location, location, location. The real estate market has it right. It's all about location. And these candle patterns and candlesticks are going to be improved dramatically by matching that with finding them at support resistance levels. So when you have any of these candle patterns occurring at a support resistance level, it's going to increase the odds. It's not going to guarantee it, because there's no guarantees in the market. This is all it's all possibility, and there's things that you need to take place in the market. There's too many things that have to happen in alignment for things to work out, but you can increase the likelihood of success by pairing things with, like I said, with candlesticks. So
I'd like to mention that I can't remember if it was the forward or chapter 1 where where it was said that to make sure and that they recommend that other technical analysis is included. It's not just what they're saying in this book.
yeah, exactly.
I have it started here at the bottom of my notes. It says, also stated that all patterns should be confirmed with other technical methods.
Yeah, and anytime you can get multiple technical signals aligning with each other, the better it's going to be.
I agree.
It's confirmation, right? Or confluence.
I love technical analysis. I do.
Technical analysis too. I really do.
I know. And I think a lot of traders do. I don't know. I don't consider myself being really that odd or different. I likely am, but with technical analysis, I don't know. I'm infatuated with it. I love making the technical analysis even better. Like people like you that write code, when you combine like 3 technical analysis things and you just create a new code or something like that, and it's just on my chart, and I'm like, oh, I love it.
I want to say something though, because I get this a lot with students or with comments that I see in our chats and what have you, that, people are trying to trade with these single patterns. And I want to say this. Price action and volume make up the market. That's what it is. And technical analysis or candlesticks, there's a context that needs to be considered. There's a story that's trying to be told. The market is trying to tell you a story, and it needs to be put into context. And candlesticks are the words used to describe that story. And just like anything, if you just take a little snippet out of it and you ignore the context, you can turn it all the way around. And that includes punctuation. It includes everything. And I mean, I could tell you a couple of stories about, getting the words wrong just in the way you say it, whether you should have put a comma there or not put a comma there. But my point is that this is it's a context, and all of these things are trying to give you, tell you a story. The markets are trying to tell you a story, and you need to put it into context. And that's where some of these tools like candlesticks and volume, when you put it all together in the bigger picture, not just one individual candlestick, you need to look at the context of that candlestick. And that's why I'm saying location, 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 etc. Look at the bigger picture. Don't just...
It's funny because yesterday we did a bigger picture and we made a story. And our story was, oh my gosh, we're stuck in a range. Oh my gosh, it's chop. Oh my gosh, these candles, a 2-minute candle is gigantic. Oh my gosh. And it was Fed speak.
Yep.
The Fed was speaking. Bigger context, bigger picture. What are these candles telling us? What is chop telling you?
Well, chop is telling you that you're in balance right now. That's what chop is telling you. Chop is telling you that we're in balance. The buyers and the sellers, they're here. This is where the buyers want to buy. This is where the sellers want to sell. There's nobody that's imbalanced. Okay, there's an equal number of buyers and sellers, and they're just going to take it back and forth and back and forth. They're okay. They're okay to operate within this range. Okay, when you go to buy anything,
or algos, right? That's the thing, though, right?
Or algos too. Algos are going to respond to news, but the reality is that price. There's a value area. There's a value of what things are worth, and if you were to go to the grocery store and go to, say, 50 grocery stores and get the price of apples, and I can guarantee that you're not going to find the exact same price of apples in every single store. Some are going to offer them a little bit more, some are going to offer them a little bit less, but all the stores are selling apples because there's somebody that wants to buy an apple at any one of those stores at any given time. And they're okay paying the price because they weigh the consequences of, the convenience of driving across the road or driving down the street or driving to another city to get something cheaper and the cost of fuel and blah, 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 blah. So there's people that are willing to transact at a variety of different prices, and therefore they're okay. So when you're looking at the market and it's range bound or it's moving back and forth, it's chopping around, that's because you don't have any conviction going any other way. They're okay to transact right in that range.
Yeah.
It's okay. So the market spends the majority of its time in that type of balanced state until it decides to move into price discovery.
So bringing us back to the book, I have a question as we round this episode up. I have a short list of some that stood out to me for multiple different reasons. Do you?
Well, first of all, let's start with your list.
Okay, well, the first chapter is the second chapter. The first group of types of candlestick patterns is reversal patterns. So that's my list right now, is just the reversal ones. And then the next episode we're hitting continuation patterns. So here we go. The hanging man, which is the bearish version of the hammer. And it said, FYI, wait for confirmation. So I kind of went back and I'm like, did they explain to me what their terminology of confirmation is? And my understanding of what they meant by confirmation was either the next candle or the other technical analysis that you're using. Another one that I liked was called belt hold, but the bullish version. And I actually made little drawings. Like the book had, I actually drew it thinking that would help me. There's one that I think that we follow a lot, but I never knew the name of it. The harami?
The harami, yep.
Okay, harami.
Yep.
Thanks for the clarification. That is the inside body.
Yep.
Opposite color.
Yep.
Actually, the bullish version is the one that I found interesting, which was the really long selling with a tiny little buying body. So that at the bottom of a downtrend is a possible reversal. I just thought that one was cool. Let's see here. I have a couple more. The doji star, just don't forget that it's a warning. What I like to call the shot over the bow. I just thought this one was funny. There's two of them I thought they were humorous, but they do kind of look cool. We've definitely seen these patterns. One's the homing pigeon, which is bullish. Why are you smiling?
I'll tell you in a sec.
Okay. And then that one is a selling long candle with a inside body selling. And then the opposite of that is called the descending hawk. I'm like, those are kind of fun, but I do like the pattern, which is a reversal of an uptrend, which is a long buying with a tiny body buying next candle. Obviously the morning star reversal and evening star reversals, but they do, by the way, I think the biggest thing with that with me was like confirmation is required. They're pretty adamant about that. So I've heard Jeremy Newsom talk about this one before, and I thought he was kidding when he was calling it this pattern. The abandoned baby.
Oh yeah, no, it's definitely there.
Another one I thought had a funny name, which I know I could care less about as a pattern, is the downside gap, two rabbits. Come on, give me a break, people. One we've not heard of, but the three white soldiers.
Yep.
Because I've heard of two white soldiers, or just,
One
right?
white soldier. Yeah.
What have we heard?
One white soldier.
One white
usually.
soldier. Well, this is three. The 3 stars in the north and 3 stars in the south. I don't know. I think I've seen this in day trading, but not necessarily in like a day chart. Yeah. Which is, again, a reversal pattern. It's a long with an inside. So it looks like a huge pennant pattern, right? And let's see here. I wrote, really? A concealing baby swallow? And then I wrote, nope, I'm out. I didn't even draw it. That's all I got for the reversal patterns.
Well, I got to say, because the one thing that really got my attention are there in the introduction, in the candlestick line, so this is in chapter 2, he says, it will be shown in later chapters how most candle patterns can be reduced to single candle lines and maintain the same bullish or bearish connotations. And I know...
Yeah, you do this all the time.
I did a whole presentation on this. You guys can find it on YouTube if you like. It's Candle Camp with Tracy Ball. But I go through...
Candle Camp
with Tracy Ball. But I go through...
Marshmallows?
Yeah.
Fire?
No, I wanted to call it Candle Math or Math Camp with Tracy Ball, but I didn't think many people would actually click on the link. So basically, when you take multiple candles and you add them together and create one, what do they form? And a lot of these patterns, they turn into a hammer. And that's why, the hammer is my number one favorite candlestick of all time, even though the statistics on it are really terrible. But again, that's because they're not considering location. But if you add in or take a look, and in this book, he goes through a lot of these, you'll see that he's combining them and showing you, what do they make? A hammer. So
all hammer or inverted hammers also?
Either or, right? That's the point.
Okay.
So like the where is it here? The bearish engulfing pattern. If you look at page 38, figure 3.9 and 3.10, he's showing the combination of two candles that look like a hammer and an inverted hammer. There's tons of these examples throughout the book. There's another one on the bullish and bearish harami. Same thing, turn into a hammer and a bearish hammer. So that's why when you start to understand how to do that and you start doing it regularly and realizing, okay, well, that's a hammer, that's a hammer, that's a hammer, all you start seeing are hammers, even though they're different patterns. One white soldier, engulfing, a piercing, doesn't really matter. Price action is still the same, and you can break it down into a hammer. It just happens to be a hammer on a higher time frame. That's all. So
could you do us a favor? And there's an old song called If I Had a Hammer.
I don't know what it is.
Have you heard it?
No.
Oh, I'm totally sending it to you when we hang up.
Please.
We need to create a short music video of you doing funny stuff with candlesticks about If I Had a Hammer.
If I had a hammer, okay.
You know how many people are going to be looking up that old song? You can look it up and play it for us on the exit today.
Oh, that's
Please
funny.
do.
That's funny.
I'm requesting that the listeners get a small clip of that recording of that song at the end of this podcast as we say goodbye.
Well, we will have to post it onto our website, not onto our YouTube channel, because that'll be a copywritten.
Oh man. So that makes me think, just back to the hammer thing and the inverted hammers, that being able to kind of be in a small time frame, like a 1 minute, 2 minute, 3 minute chart, but then also seeing, quickly going over to like a 15-minute chart and going, there's the hammer. There's the inverted hammer. Or on the hourly chart, having an eye for all the time frames.
And you can do that. The reason that I taught this class of Candle Camp was because depending on where the start time and the end time is of that upper time frame, for example, if you are looking at a 2-minute chart and then you jump to a 4-minute chart, if you do the math inside of a 2-minute chart, it may not equal or show up as a hammer in the 4-minute chart because of where they're starting and stopping the 4-minute count. It could be overlapped. If it happens to fall in line with the two candles that you're using to do the math, then yes, you'll see it. But it doesn't negate the fact that it's still there. Just because you can't see it doesn't mean it doesn't exist. And that's why I like showing people how to actually do it themselves, because then you don't rely on looking at that other time frame. I don't want to have to miss the hammer all the time because I can't figure it out or I don't visualize it myself. So that's
I got to go take Candle Camp 101.
There you go. So anyway, to let you know, this book is going to be a supplement to your trading. Don't take it as individual candles, and then just remember you need context. Context is going to include location. It's going to include under other indicators, mostly volume indicators, price action indicators, because those are my favorites. They don't lag. And then that's pretty much it. And when they talk about confirmation as well, that is another area where I tend to, I guess, maybe disagree with. Yes, confirmation, but usually by the time you get confirmation, the move is over and it's too late. So I prefer to make sound decisions as early as I possibly can, get in, but manage my losses really tightly. And I'll know right away whether or not I'm right or whether I'm wrong, because I want to see that confirmation after I'm in the trade. I don't want to wait for confirmation then get into the trade, because that's usually, like I said, too late. I've missed the move. So for example, if I'm looking at a hammer and I see a hammer at a support level, it's a really good support level. That's the fact that it's at support is already going to be a good opportunity for me to get in, because it's at support. But now that they throw in a hammer, that's even better. That's two things that are lining up, and I'll get into the trade. And as long as I get a close above that hammer, then I'm feeling pretty confident about the trade. Again, doesn't mean it's going to work, but that's kind of the confirmation. I want to see the bulls step in at that point and continue to push the price higher. So I don't want to wait until I see that happen and then try and get in on a pullback or something like that. It's just too late for me. But that's my way of trading. So anyway.
Yep, I hear you.
Stick around for the next episode. We'll see you then.
Thank you for joining us today. For more information about the show, as well as our list of current reads, check us out at www.theelevatedtrader.com.
Remember to subscribe and share if you found value in today's episode. See you next week.